Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, July 15th. We got quite a few economic news releases. As I indicated yesterday, that Tuesday on, we're going to have quite a bit to go over this week. So we'll start off with the retail sales for the month of June. So we had a 0.5% in the month of May increase, and the forecast for June was to go up 0.6%, and it came up 0.2%. Retail sales, when you exclude the big ticket items like autos, we had a zero point 0.4 back in May. Zero point 0.6 was the forecast, and it came up 0.4%. So overall, retail sales went up. Not necessarily what the forecast projected, but it still went up. Import price index for the month of June. So back in May, was up 0.3% for forecast for June, zero point 0.4, and it came up short. So not a bad idea right there. So import prices didn't go up as much as we anticipated as well. So good things there. And then Empire State Index. This is the manufacturing numbers in the New York region. So we had a 19.3 back in June. 17.6 was supposed to decrease a little bit in July, and it shot up to 25.6. So these are excellent numbers. We hadn't seen these numbers in quite some time, especially in those regions there. So manufacturing is starting to show some rebounding here and really kind of taking off here. So these are good numbers here. Business inventories for the month of May, we had 0.6% back in April, 0.5% growth for projected for May, and it went up 0.5%. So as expected, business is expected to expand, especially with the improvement in the labor market. We're kind of seeing that. So overall, actually, really pretty good numbers here. What we're seeing here. Let's take a look at the headline news. So we see the stock market down. So why is it down after seeing some decent news? Yellen's congressional testimony. Some comments were made, especially regarding to if the labor market keeps continuing as rapid it does, and we hit the dual indexes. We're looking at the inflation numbers as well as the labor numbers, that the Fed could be raising rates much sooner than they anticipated and much quicker in rapid turn, raising those interest rates than we initially projected. So initial projections were estimated that they were going to go ahead and start raising rates basically this time next year in 2015. But because we're down to about 6.1% on the unemployment, we had a couple of months there where we're pretty high on inflation numbers. We could be reaching that 2% threshold and that 6% labor market here very, very quickly. And as such, we could potentially start raising rates. Now, there's a lot of people, Fed members that are non-voting members, that are pulling for raising rates much sooner, but she still isn't quite convinced that we're out of the blue yet, and wants to see more data to support going into the more data before she starts raising interest rates. So she's a bit more dovish than some of the others. A lot more. Some of these other ones are a lot more hawkish. But if the labor market continues, the main thing I think she'll look at is will probably be the inflation numbers, and we're not quite there yet. So she may kind of waver a little bit on the inflation numbers to get to where she wants with the unemployment and labor market. But right now, it's going at a pretty good pace right now, and it could potentially cause rates to go up much quicker than it initially expected. All right, so just be prepared for that. Let's take a look at the bond market. Bond market's pulled back quite a bit. So what does that mean? Interest rates has gone up a little bit. We're actually a little bit lower than this. I think this yesterday. Sorry about that, folks. But we actually went down a little bit lower. We're actually down to like 102.01 range, and that's enough for a price decrease, or I mean price worsening. So that means rates crept up a little bit since yesterday. All right, folks. But again, this could change this week. We got a lot of news coming out this week, so anything could happen. Again, with Janet Yellen talking, as we saw, we had some good news. We got the market switched because of the comments she made about, especially about raising interest rates sooner than expected. This could create a lot more volatility in both markets. Okay, have a wonderful day, and we'll look forward to seeing you guys tomorrow. And tomorrow will be the last day of Janet Yellen speaking. So again, tomorrow we'll have the same volatility that we had today. Take care.